There you have it, the closing bell at the New York Stock Exchange, ending another day of trading. The Dow Jones saw some ups and downs, eventually ending up at around 190 points. The S&P 500 and the Nasdaq both ended up at around 0.7%. Saira Malik joins me now. She's the Chief Investment Officer at Nuveen, a financial planning company. Saira, it's good to see you. Can you just briefly tell me what's driving the market today?
Well, history tells us that September is historically the worst month for equity markets. We are seeing that play out this month. After the dismal week last week, we're not surprised to see a little bit of a bounce today, but investors are taking a wait and see approach. The Federal Reserve meets this week, and until we see them come out with either a 75 basis point or 100 basis point rate hike, markets are going to hit the pause button until we hear what they're saying.
You know, the Fed kicks off its two-day meeting tomorrow. We've been expecting that will end with another federal interest rate hike. What are you expecting to come out of that meeting, and what would be the outcome of such hike?
We're definitely going to get a hike. The question is 75 or 100. We're expecting three outcomes. We think 75 basis points will be the rate hike. We also do not expect to hear the Fed talk about pivoting. And what I mean by that is we don't expect to see rate cuts anytime this year or in 2023. And Jay Powell should remain hawkish, and he will continue to talk about battling inflation, potentially at the expense of economic growth, because after that very hot CPI number last week, inflation is sticky, and it's going to be a challenge for them to bring that number down to their target level.
And we should expect yet another hike later this year, right?
I think we might see continued hikes at a more moderating rate going forward. So we get 75 basis points or 100 basis points this week, and then continued hikes more in the 25 to 50 basis point range for the foreseeable future until we can get inflation down to lower levels. We just got the CPI number last week. We had high food costs, shelter costs, and healthcare costs. Those tend to be sticky, and it's going to be tough for the Fed to bring those down until we see some reduction in demand, which would be as we approach a recession, or reduction in employment. We haven't seen that yet.
Not to mention housing. As we prepare ourselves for whatever the Fed announces, what should people expect both in the immediate aftermath with the stock market and also longer term when it comes to inflation levels?
In the immediate aftermath, people will be listening to hear what does the Fed say, what is their tone. We expect that to be a hawkish tone, which means a tone that says continued interest rate increases for the foreseeable future until inflation starts to moderate. The next step is going to be earnings. Third quarter earnings are coming out reasonably shortly in a matter of weeks. We've already seen the estimates for companies decline. We saw FedEx pre-announce poor earnings just last week. This could be the next shoe to drop. Earnings are going to be hurt by higher margins because of the inputs of inflation cost pressures, demand destruction as the economy slows, and a strong dollar is a headwind for earnings. So that's another thing that also should have an impact on the markets. And then inflation will take a while to moderate. Likely, we have to hit a recession and demand has to decline before inflation will decline.
Hopefully not inevitable. Saira Malik, thank you so much.
Thanks for having me.